Hey, good morning, everyone. I'm Shri. Today I'm going to discuss the exploring entrepreneurship and economics. So, entrepreneur journey is a long journey and it requires proper planning and appropriate execution and operationalizing that. As part of this, the feasibility analysis has to be done. The viability of the business plan has to be validated. Business plan has to be created and business validity needs to be done, and financial planning has to be done, and marketing plan and sales process has to be executed, and finally the growth strategies need to be planned as well. So this use case, in my presentation, we'll see the viability of the business plan using the HelloFresh case study, and business plan using Delights, and business viability using Spindrift case study, and sales process using Engineering for Kids, and growth strategies using Wow. In the entrepreneurial journey, to turn the idea into a business, the first and foremost thing need to be done is the feasibility analysis. That will determine the business viability. The feasibility analysis needs to be done from four aspects. One is the product and service feasibility. The second is the industry and market feasibility and organizational feasibility, and finally, the financial feasibility. The product and service feasibility should address whether the product and service would be appealing to the customer so that they can buy. And is it the right timing to introduce the product and service? And finally, what are the features and flaws in the product and service? The industry and market feasibility should address how is the industry and is it a growth industry? And from market perspective, the target market need to be identified, whether it is a blue ocean market or is it a red ocean market, and is it fragmented versus segmented, and also the opportunity, the growth opportunity within the target market needs to be determined. The third is the organizational feasibility, which is more around the management expertise within the company, the competence of the organization, and finally, the resources available within the company to launch. And the fourth one is the financial feasibility. It's more about analyzing the financial performance of similar businesses and financial attractiveness, and what is the startup cost needed, and finally the financial statements. In case of our case study, I have chosen the company HelloFresh and its business viability. So, first, the product and service feasibility. Looking at this, the HelloFresh got a variety of meals and variety of recipes at an affordable price, and its flavor and the recipes are very straightforward. And it has got a flexible plan compared to many other competitors, such as Blue Apron, Freshly, and Every Plate. Looking into the market and industry feasibility, the US food delivery market is expected to grow from 2.5 billion US dollars to 7.68 billion US dollars in 2024. So that means HelloFresh has got more opportunity. And also, HelloFresh is one of the biggest players globally and it has got the first mover advantage as well. As of now, the market penetration for HelloFresh is only 5%. That means there are more opportunity exist. So from industry and market feasibility perspective, this looks very positive. From organizational feasibility, the business is started by a team, Dominic, Thomas, and Jessica. They are all serial entrepreneurs. And because of that, and also they are influencing a positive culture in the company. So it shows a positive trend from the organizational feasibility as well. Looking at the financial feasibility, the company generated revenue of $3.6 billion, which is 66.4% year over year increase. The customer base grew 88% year over year, and the number of orders jumped to 82.2%. So, comparing all this feasibility, the HelloFresh is most likely a viable business. Only thing is, as of now, it is missing some of the information such as the profits and current ratio, etc. So it would be good to validate those metrics as well before confirming the business viability. But it is leaning more towards a viable business model. Once the feasibility analysis is done and business model is being decided, it is important to do the business planning before jumping into the execution. The business plan should address the executive summary, industry analysis, company description, market analysis, economics of the business, marketing plan, the design and development plan, and the operations plan, and the management team structure, and finally the overall schedule and financial projections. In our case study, we will do the Delight's business plan detail. We will analyze the Delight's business plan and its business viability. So the business plan has the first few sections, which is executive summary, industry and market analysis, design and development plan, etc. So looking at the executive summary, it should address the mission, purpose of the company or business. The mission of Delight is to transform the lives with sustainable products. And currently, 940 million people does not have access to electricity as of 2016. So Delight has been started as a for-profit organization and it provided more affordable solar powered solutions. In West Africa, only 8% of the people having access to electricity. That means there is more opportunity exist. Looking at the industry and market analysis, the market for the solar powered affordable solution is around 2 billion people globally. And the large companies are not able to solve this problem where people are not having um, access to electricity and a sort of solution to provide that. Delight, they listened to the customers. They observed that the 40 percentage of the poor country or poor people, they spend their income on kerosene. And Sam has to come up with the innovative thinking and innovative solution to solve the solar powered sustainable product at an affordable price. So he created prototype based on customer feedback. So in his design and development plan, he got a strong business model and he iterated the design and development. He had a short development cycle. He had an iterative development based on the feedback from the customers. So the next section of the Delight's business plan is economics. So as part of the Sam analyzed the startup cost, revenue drivers, and profit margin. So he won 250K from the venture competition, business model competition, and he used that to do the further startup cost, etc. Right? And also, when we are doing addressing the business plan, the economic sections, the fixed costs need to be analyzed, variable costs need to be analyzed, and operational leverages, financial leverages, and break-even analysis need to be analyzed as well. As part of the marketing plan, the marketing needs to be done efficiently. And Sam turned the local people into dealers and entrepreneurs. He established the regional centers, he identified the local people, and trained them into a salesperson, distributor, and retailer. And the marketing happened primarily through word of mouth or storytelling or demonstration by the salespeople. And finally, the operating plan, which includes how to scale the company. And also, it should address the rules and regulations and tax permits and license cost and all other details needs to be briefed and planned as well. In the next section, we'll validate the spindrift business viability. The spindrift mission is to provide a healthy soda option and an alternative to the sparkling water. Soft drink market, from revenue perspective, it is having an opportunity of 230K million in US, and it is expected to grow annually 4.4 percentage. And considering Spindrift, it has got a first mover advantage, and its competitors are Hint, Was, Buy, Fine Waters, PG Waters, etc. Considering all the further details, the Spindrift could be a viable business, but additional information is required to confirm that. The additional informations are net income, cash flow, current and quick ratios, debt to equity ratio, etc. Investor considerations. So if I were investor, I have to consider the profitability, liquidity, stability, efficiency before providing the funding. So generally, I would invest if the profit is increasing and if the profit margin is much higher than the market growth rate. So in case of Spindrift, the revenue is 29.2 million in 2018 and it increased to 100 million in 2020. Looking at the liquidity, I would invest if the ratio, current ratio and quick ratio is greater than 2. And similarly, considering the stability, I would invest if the debt to equity ratio is around 30%, and I won't invest if it is greater than 50%. And finally, Spindrift has got a funding of 88.7 million till December 2020. That shows that Spindrift has gained the investors' attention and attractiveness, and it is leading towards a viable business path. From the founder consideration perspective, how do we finance the organization? I have got an option of equity financing, debt financing, and bootstrapping. So I would choose debt financing if the risk is low and if the return is very predictable. And I have a strong cash flow, low leverage, and healthy balance sheet and audited financials. In case of debt financing, I should be ready to show to the bank the business model, business plan, cash flow, balance sheet, industry and market performance, and assets and management team experience, etc. So I would choose also equity financing if the risk is a little higher and I'm ready to share the ownership. However, to avoid losing the ownership and control completely, I would at least secure the 51 percentage of the stocks. And finally, I would use the bootstrapping strategy if the risk is extremely high and the firm is at the very initial stage. And finally, to scale the business further, I would use IPO and the SEC filing as well. Looking at the Spindrift's competitor considerations, initially Spindrift is a first mover and it has got the blue ocean strategy, but however, due to the competition, it has to adapt to the red ocean strategy. And it was listed as one of the fastest growing company in 2017, and its success is because of the transparency to the customers. And here you can see the various competitors of Spindrift and their revenue and their employees and their funding. For example, Hint, Was, La Cruz, etc. Looking at all of these, the Spindrift excels in the revenue to employee growth, and investors also believe in Spindrift and invested more compared to competitors. So, finally, looking at all these details and facts, I would lean more towards the Spindrift's business viability. And it looks like could be a more viable business, and I could invest in that. However, I do need further details to confirm that. In the upcoming section, we would address the sales process of the Engineering for Kids. Engineering for Kids is focused on the STEM for the kids of age 4 to 14, and primarily they have classes, projects, and workshops focused on engineering, and they distribute the materials and the toys based on that. And they primarily started in 2009 and now they have 170 franchise units, and it is one of the fast growing, and primarily generated 787.5 billion US dollars in 2019. So when I look at the sales process for the franchise, since it has got 170, there are a few steps need to be followed, and it is called seven-step process basically. So you want to visit the several of the franchise outlets, you want to meet with the franchise attorney, meet with the franchisor, and also check with them the references and review the franchise document and sign the franchise agreement, attend the training, and finally open the franchise business. As the Engineering for Kids uses many materials, there are IP materials associated there and it needs to be protected. So these include trademarks, copyrights, trade secrets, proprietary information, patents, etc. And there are many laws which are there to protect these things. For example, trademark, it's protected under Lanham Act, and the trademarks can be registered with the United States Patent and Trademark Office. And similarly, Copyright Act is there, and trade secrets. So primarily, it's more around method of teaching, what's the process being followed, etc. And it can be protected under United States Trade Secrets Act. And finally, there is a patent law, and it can protect the patents too until until the patent expiration period. When you want to purchase the franchise for Engineering for Kids, follow the seven-step process which was detailed earlier, and also make sure the legal and ethical things are considered. There are laws to protect that. For example, antitrust law, federal disclosure rule, advertising expansion, encroachment, termination, and renewal. So there are various policies and laws to protect it. And as part of the purchasing, one of the important thing is franchise disclosure document. And that document, the franchisor should have filed that with the state and federal government, and that would give more details on the franchisor history, affiliation, any other litigation, or any other restrictions or obligations between the franchisor and franchisee, any of the IP, copyrights, etc. So it would give all the details. So it's important to read through the document, and with the help of an attorney, it would help further. The franchisor and franchisee also need insurance to cover unexpected events. So, considering all those details, engineering for kids is one of the excellent franchising opportunity, and I would franchise that. And it is basically they do the franchising based on the territory size and location, and they also provide training material and plus the platform plus the IP materials and other things. From financial perspective, they do require initial franchise cost, investment cost, royalty fee. So you can see further details over here. And finally, validate and sign all the documents, attend the training, and operate the franchise. In the next section, we would analyze how can we grow the business and what are the strategies can be adapted. And in case of water sports, what can be done as well. So when it come to growth strategies, that can be internal strategy, that can be external strategy. For example, the internal strategies can be new product development, market penetration strategy, extending the product line, extending the geography region, and international expansion. In case of external strategy, you could do merger and acquisition, licensing, strategic alliances, joint venturing, and franchising. So, looking at the WOW is a water sports. Primarily, they produce, manufacture the water floats. They have approximately 55 employees and they generate a revenue of around 4 million. And currently, they only exist in US and they don't have any M&A or funding outside. So, looking at the market, right? So, the global water sports market, it is one of a growing sector, right? So, WOW has got a potential to grow as well. And looking at both the strategies of internal and external, right? What are the strategies can be adopted in case of WOW? Generally, the internal strategies are more organic and comparatively slower growth. The external strategies are faster way to expand, but there is a high risk associated as well. So, when you're selecting the growth, it should be a sustainable growth. And considering all the facts, so WOW can start with internal growth strategy at first and eventually can lead into external strategy. As we are starting the WOW water sports with the internal growth strategy, it can be done by extending the product lines and expanding to the international market, etc. So, WOW currently focuses only on floatables. So, there is an opportunity exists to go and expand and create new products. So, looking at the market, right? So, water sports has got a market of 55.2 billion, and the water sports cloth take the highest market share, and it is followed by swim spins, masks, goggles, etc. So the WOW water sports can focus on some of these products. Similarly, the kid segment takes more market share and it grows fast as well. So, WOW can focus on producing kid specific products. On the recommendations to the international expansion, currently WOW exists only in US and it does not have any presence in outside of the country. So it can expand to international. When you're choosing the international market, there are some factors need to be considered. What is the market share in that market? What is the cultural closeness to the home market? And what is a business friendliness index? So, considering all these factors, the potential countries where WOW can expand the business are Canada, Mexico, UK, Germany, and France. Finally, to wrap up, when you want to start a business, it is important to consider the feasibility analysis and select the idea so that it can turn into a successful business. And then plan appropriate business model and create appropriate business plan. Perform market research, perform the SWOT analysis, identify the financial needs, strength, and funding methods. As the business starts to take off, plan the growth strategies as well. Here are some of the references I have used in this presentation. Furthermore, references used in the presentation. Few more references. And finally, few more references again. And again, thank you for listening. Thank you.